Good evening, everybody. Welcome to tonight's webinar, where it's 8 p.m. here in Hong Kong and Singapore. And welcome wherever you are viewing this webinar. It's great to have you on the line, and we know we've got a really good audience this evening. First of all, may I introduce my guests? We have Nicola Smith, Associate Director from Complete Limited in the UK. Nicola, welcome.
Hello, how are you?
I'm very well, thank you. How are you in Manchester there?
Good. A little bit cold. I've washed my hair for you today, so obviously I'm coming from home, not in the office.
Yeah, it looks great, and you look very relaxed in your home there, so great to see you. And also got Stacey Roja, Investment Manager, IP Global. Stacey, welcome.
Thanks, Grant.
Yeah, how you doing?
No, good, thanks.
Good, good. Great to have you. Looking forward to working on this webinar with you. So
yep,
fantastic.
Should be good.
Okay, so tonight we're going to be talking about Birmingham. Delighted to be sharing details of our first Birmingham launch of the year, which has started off really, really well. And it's a great chance to have this presentation and share the details of Birmingham. And then Stacey's going to talk about the actual project itself, and Nicola's going to share some great insight into the Birmingham rental market. So first of all, let's get into the presentation, and let me begin. Right, so there's a lot of new people on the line, and I want to share a little bit of background to the business model first of all, which is absolutely key to IP Global. I've been in the business for 14 years. I joined in 2006. Since that time, IP Global has transacted $3.2 billion of property over 30 markets. In terms of the business model, that really is the critical element of our business. It's very, very different to a marketing agent. We don't just market property on behalf of developers, we actually underwrite. So in effect, we are taking risk. We are putting our own capital down on these projects. We're getting exclusivity for our clients. The developers build them. We then go to our clients with the exclusivity and the fact that when we're presenting opportunities, whatever we don't sell by the time that building is built, we have to complete on the unsold units. So we are truly aligned with our clients. We are demonstrating to our clients that we are taking risk with these transactions and that we absolutely believe in them 100%. So that gives our clients a lot of confidence. It's why we've got a lot of repeat buyers over the years. And we don't do many projects. We are extremely selective on what we do. And that's due to the great work of Stacey, bringing the best opportunities to IP Global. That is a critical element, that we are aligned with clients, and in effect, we don't get our capital out till we complete. So we are there all the way through the transaction to demonstrate that we are working in an equal partnership with clients. When a client does invest, we can introduce them to the lawyers. We have the mortgage operation. And as I say, the good work of Nicola Smith and her team in the UK, we have the lettings and management operation to do everything around the rental process. On the screen there, it's just showing a little bit to do with the markets we're investing in, which are Germany, Portugal, and of course, the UK. And obviously tonight we're going to be focusing particularly and specifically on Birmingham. Right, so let's have a little bit of background to the UK property market. In effect, I think it's good just to go back to the Brexit referendum. Post the referendum, what we saw was actually quite a subdued market. People were trying to make sense of Brexit. A lot of developers put off building. And really, up until the end of last year, the market was not as active as it had been with the political uncertainty of the Theresa May government. And then really, it was only in January of this year that it started to change once the new Conservative government was elected, big majority, and a clear path defined for Brexit. So what we saw at the start of the year was Jan, Feb and March were very strong in terms of our UK sales, and a lot of that was strong regional activity, given the fact that HS2, the high-speed rail link, was given the green light at the start of January from the British government. And then in effect, the pandemic struck, which basically meant that the latter part of March, April, May were very quiet. People were keen to talk property, but there was they were not keen to make transactions to make sense of the uncertainty. And then really what we saw from sort of June onwards was that pent-up demand start to return. So a lot of interest back in the market, a lot of transactions starting to happen. Government stamp duty holiday was put in place, which really incentivized the property market to start moving. And then in September and October, we've seen record mortgage transactions. So a lot of impetus and energy into the property market is what we've seen in recent months, and that continues to be the case right now. So, of course, for our international investors, we have a lot of actual additional insurance for investing. I mean, when I think about, when I look at these numbers, I came out to Asia in 2006. It was 16 Hong Kong dollars to the pound at that point. Quite incredible. Now we're sitting at around about 10 Hong Kong dollars to the pound, just over 10 Hong Kong dollars. So real strong value for clients investing in the UK. Of course, with the ongoing Brexit negotiations, that uncertainty is bringing opportunities for our clients to really take advantage of the weak pounds. And then, of course, similar to Singapore, and I know that there's a lot of clients from Hong Kong and Singapore on the line, so using these examples, but there's a whole host of other sort of currency opportunities I could use. Again, when I was in Singapore for IP Global in 2009, we were talking close to 3 Singapore dollars to the pound, and again, it's sort of 1.78. So it's a huge sort of reduction there, and as I say, gives people great buying power into the UK. So on to Birmingham, and I'm just going to share a couple of sort of high-level sort of thoughts on the market. I mean, when I think about Birmingham before I went to Birmingham last summer, I have to say I had a very, to be honest, sort of patchy, sort of sketchy, sort of negative sense on Birmingham. To be brutally honest, I remember the old bull ring. I remember how sort of drab and dreary the city looked. And then when I went there last August, I was kind of blown away by, in effect, the high-level regeneration, all the investment that was starting to go in on the ground, as obviously you're sort of well aware of, Stacey, from your visits as well. I mean, it's really sort of noticeable how it's changed. The old bull ring is now a smart sort of shopping centre. You have the mailbox, you have regeneration going across things like the Smithfield regeneration, Chamberlain Place. There's just so much investment going in there. And what struck me was we started investing in Manchester in 2015, and the regeneration seemed to happen in Manchester a lot earlier, when the pricing was on some of our projects about sort of 340, 350 a square foot. And then we see the centre of Manchester now, there are some projects at sort of 650, 700 pounds a square foot. And here we are talking about Birmingham, the closest city to London, and we're talking about half that price of Manchester, about 380 a square foot. Yeah. So that's the exciting opportunity here we see in Birmingham. The fact that, the pricing hasn't necessarily moved in recent times because the regeneration hasn't been going on. Now it's in full swing right the way across the city, and we see it clearly as a great value opportunity now.
I think on that, Grant, sorry, just going back to that last slide on Birmingham. I currently live in Manchester and previously did live in London, and I do agree with your sentiments regarding what Birmingham used to be like. It wasn't a place you would ever visit. When I lived in London, I'm from the north, so people would kind of talk about Manchester as a place they might visit, but you would never talk about Birmingham as a city that you would go to for a weekend or, for leisure. But now that's definitely changed in the last 2 years. Friends I have that still live in London, or friends in Manchester that never would have gone to Birmingham, are choosing to go there just to actually enjoy the city and how much it's changed. So it really is true that things are changing there, and for the better, much for the better.
Yeah, no, I agree. And to your point, I think there's more Michelin-star restaurants in Birmingham than anywhere outside of London now. And, just really sort of trendy bars and restaurants I saw last year, which you know, I just didn't think was going to be the case.
Yeah.
So no, I definitely agree with that, Nicola. It is a good place to go to now. And then, yeah, just sort of sharing the on the investment side. I mean, we see it as the second largest economy outside of London now, just under 40 billion. Last year there was 81,000 jobs created, a huge amount of jobs, the biggest in the regional cities. And what we've seen in recent years is this what we've previously referred to as Northern Powerhouse. You know, corporates moving out of London, North Shoring, the likes of HSBC, Deutsche Bank, Barclays, all these big corporates with the better infrastructure that goes hand in hand with the high-speed rail link and all the associated regeneration. Corporates moving headcount out, you know, it lowers their cost base, etc. They have the infrastructure there, and the population of regional cities such as Birmingham growing more and more. And indeed, you know, Birmingham is the second city clearly in terms of the population size as well now, and as I say, continues to grow. Okay, so, you know, typically we talk about UK market being undersupplied, the fact that planning rules and regulations are quite archaic. So we see all the population growth happening in the regional cities, and particularly Birmingham being the closest to London and the first stop outside of London for corporates to consider moving. So over the next 20 years, we're talking about 100,000 additional households to be created. And, you know, it's quite exciting when we look at that slide there and we see, you know, over the years from 2021, 2022, 2030, the undersupply is just getting larger and larger. You know, the planning rules, the planning applications are just not keeping pace with the build. And, you know, it's just making a situation where it is incredibly attractive for investors over the next number of years to take advantage of that, and presumably, Nicola, that will have a very sort of positive impact on the rental side.
Yeah, I mean, always with rents, when demand outstrips supply, there's an increase. The choice isn't there for negotiation, and it will always push the rental market up. So yeah, definitely.
Yeah, and
I was going to say, just to add to that, also obviously, just with the lack of supply, it's pushed people into the rental market because they haven't been able to, you know, buy what they need or get the housing requirements that they need. So it drives both obviously house prices as well as the rental market.
And presumably that's why it's taken so long to find a project, because of the fact of the undersupply and making sure, of course, then we get the sort of right locations, etc. Yeah,
no, for sure. I mean, it's been difficult to find obviously the right projects in Birmingham. It's not sort of like Manchester where you see a lot going on at the moment. So yeah, it's picking the right one, but then also it takes a while to get these projects through planning. To get the land, it's extremely difficult to buy land now in Birmingham. Obviously because it's on the up, it's becoming expensive. So you know, these go sort of hand in hand to try get the right price, get the right project. And work with the right people. Yeah,
absolutely. I mean, it's obviously key to work with trusted partners that we know are going to build a high spec, high quality product. Okay, so let's move on. In terms of, if we just go on to the next slide, we'll talk a little bit about the regeneration. So sort of just drilling a little bit into the detail. So what do we see in Birmingham? We see a very strong big city plan, 50,000 jobs looking to be created over the next 20 years, around about 16 million square feet of mixed-use floor space. Obviously, one of the big things that I just briefly mentioned earlier is the high-speed rail link that will go from London right the way through Birmingham up to the regional cities and up to Edinburgh and Glasgow, which is really going to be a game changer in terms of connectivity. Of course, in the new sort of COVID world, effectively you could be working anywhere across the UK and be getting the high-speed train into different parts of the country very, very quickly. And you know, if we look at the planning there, so 2026 Birmingham to London, and then 2033 Birmingham to Manchester and Leeds and beyond. So you know, the connectivity across the UK is going to go up a significant degree over the next number of years. If we look at the little map on the right there, the bottom, so obviously Stacey is going to go into a bit more detail about our project Eastern Green as we go forward. But the fact is, where the project is, it's in Digbeth, which is a very sort of up and coming trendy location. I mean, if we think about Hoxton and Shoreditch in London, that's what it will come over the next number of years. It's basically an area that will be where the HS2 would be going into very, very close by, and all associated regeneration. So maybe I won't say much more, Stacey, because I don't want to steal your thunder.
No, that's okay. I mean, we were talking, yeah, we were talking just earlier about, you know, when COVID eventually passes and people go back to work in the office, that people are going to probably try and maybe work 50-50, right? 50% in the office, 50% at home. And I mean, you know, with HS2, it's going to take you 45 minutes to get into London.
Yeah.
Why wouldn't you want to live slightly out when you're only commuting now half the days you would?
Yes.
But you're getting a lot more value for your money in these places, in a city that's given you a lot of the opportunities that London's now given you, like you're saying, the Michelin star restaurants. It's got the nightlife, the restaurants, the cafes.
Canals. Yeah.
I think on that as well, Stacey, the 45-minute travel time, I mean, from experience, when I lived and worked in London, I commuted just over an hour door to door from home to office, and I did that for 2.5 years, and it was very common. So I see no issue, or you know, it is factual that people will travel 45 minutes from Birmingham to get to London. So yeah, I mean, they'll get there quicker than I did. And enjoy the new area. The team that we have based in Birmingham, when I speak to them about Digbeth, I mean, it is already happening. They have the pop-up bars and the you know, the trendy restaurants, the kind of secret dinner clubs. That's all there. So it's only going to expand. And you know, I know you mentioned Hoxton and Shoreditch, but I guess the equivalent in Manchester is like an Ancoats or a Northern Quarter. That's what it's going to be in Birmingham, which would be, or always be, a great place to live if you want excitement and city life.
Yeah, and of course, in effect, with those short journey times, when you're talking about 45 minutes into London, in effect, you could have a young couple sharing an apartment, and one working in Birmingham and one working in London, right? In effect. Yeah. I mean, that would be nice. I know when I moved up to Manchester, essentially my husband had to quit his job and move with me. So to have that kind of flexibility across the UK, it's a nice future to think about. Yeah, absolutely. Okay, so let's move on. And this is just worth sort of dwelling on, you know, the superb location geographically of Birmingham, you know, smack bang in the centre of the country. When you look at those journey times when HS2 is completed, you know, 45 minutes to London and just over 45 minutes to Leeds and Manchester as well. So, you know, that's really great connectivity. It's why it's so attractive for corporates to base themselves in Birmingham and sort of knit together their regional offices across the UK. And you know, you're into Glasgow and Edinburgh in under 4 hours. I mean, in fact, just over 3 hours. So quite incredible. That's the new station, what it will look like in Curzon Street in Birmingham. And I think this is a key thing. It's not really just the station. It's all the associated regeneration that goes in alongside that, all the retail, office, commercial, etc., that will absolutely transform the city of Birmingham. And as I say, drive a lot of growth into the city. So amazingly well connected as a city, Birmingham is and will be over the next few years. So very, very exciting future. Okay, so that's it from me for now. I'm just going to hand over to Stacey, who's going to share a little bit of background to the actual project itself that you've worked very, very hard to bring to IP Global. So over to you, Stacey.
Thanks, Grant. Yeah, I mean, as you mentioned, and as Nicola was saying, our new project, Eastern Green, is based in Digbeth, sort of the new up-and-coming trendy neighbourhood, as you call it. And as you said before, I mean, whenever I sort of do these business trips and go to Birmingham, there always seems to be something new happening there, or, you know, some new development that's going on, or the city centre seems to have expanded somehow, and there's restaurants in this area. And you can definitely see it. I mean, the regeneration and investment started in the city centre. It's gone to sort of the jewellery quarter up north, and now it's sort of heading south. And I think over the next couple of years, Digbeth is very much just going to be an extension of Birmingham city centre. I mean, the Eastern Green here is based in Birmingham, off Digbeth, off Bradford Street. So, I mean, Bradford Street takes you right up into the heart of Birmingham. New Street Station. I mean, we walked outside New Street Station, you know, down some steps and then straight onto Bradford Street, and there you are. And even that whole road going up to Eastern Green, there's plenty happening. There's developments that are already completed. There's tenants in there, fully tenanted. So you can see there's a lot happening, which is always great, right? So yeah, we're delighted to be in Digbeth. We definitely think it's the place to be in Birmingham. Like you were saying, with Manchester city centre, prices there have just skyrocketed. I mean, we get seeing stuff that's £500-600 per square foot. I mean, you think that's crazy, right? That's sort of London there.
Yes, correct.
So yeah, I mean, we still think there's a lot of value to be had in this sort of Digbeth area of Birmingham at the moment. So yeah, it's a beautiful building, as you can see, a total of 130 high-spec apartments, floor-to-ceiling windows, so obviously letting a lot of light, and then also quite a number of units do have these nice balconies on them to obviously enjoy the fresh air of Birmingham. IPG have secured 74 of these units. The other units the developer will be keeping. He's decided that he thinks that they're going to sell for a lot more after 2 years when it actually completes. So he most likely will be holding on to them and then selling them off in the local market in about 2 years' time. And then also some he's actually keeping just as rental income. So you're going to rent them out through the company and just sort of earn that income.
Yes, it shows he's got great belief in his product, as we do as well.
Exactly, and I mean, to have the confidence to hold that many apartments for 2 years, he knows, he's going to get a higher price and he's going to be able to sell them when they eventually complete.
Yeah, I was going to say that's very rare. Like, we don't deal, I mean, we specialize in managing multiple units within a block, and very rarely do you get a developer that would keep hold of that many. So yeah, it's great for this particular development that he is.
They've got belief in the product, and obviously that's important for you, Nicola, to be managing a good product for your clients renting these units down the line, right?
Yeah, definitely.
Yes, I mean, if you look at sort of the values now and that, and then you know that it's going to be on the market for X amount more, you're already seeing the capital growth in the construction period, which is great, and is what you want to see, right? You want to be buying at today's prices, not prices when it's built in 2 years' time, which happens with a lot of developments. A lot of new build developments or off-plan developments, they build in the pricing during the construction period, which is obviously very risky because you never know actually what's going to happen. Look at this year. So yeah, we believe very, very good value for what's going on the market. I'll get onto what else is selling in a moment to just see how we fare there. But yeah, we've secured 74 of these units. As I mentioned, it's a pretty good mix of 1 and 2 beds, and also very nicely sized apartments. As we were saying earlier, if you're living a little bit out, you want maybe a bit more space, a little bit more value there. So yeah, really nice sized apartments there. Payment process, also very sort of competitive what's going on in the market at the moment. So it's 15% on exchange of contracts and then 85% on completion. So we are seeing other developments around going for 20% and 80% and 25% and 75%, which obviously just means a slight bit more of your money is at risk when you're exchanging on contracts. So and it is an off-plan development, so we like to keep that as low as possible.
And the lead contractor for this is managing the HS2 project, is that correct?
Yes. The project manager, Arcadis are the same lead project managers as that are in charge of the HS2.
Right.
So yeah, the developer can chat about it a bit later, but he has a very, very good team in place, which gives us a lot of confidence that he's going to deliver a really good project. And then I think one thing that's very important to note nowadays is the ground rent. I think it was something a couple of years ago that people didn't really pay much attention to. You know, you'd see a figure of 300 or 350 or whatever it may be, and you just sort of sign the dotted line. So with lenders nowadays, they're particularly strict on the ground rent. So the ground rent shouldn't exceed 0.1% of the purchase price. If it does, they tend to just not lend on it. It restricts your lending options a lot. So we make sure sort of all of our developments going forward, it's at that 0.1% mark. So we do say, you know, when it's easy to only look at the price, you know, and then not look at these smaller details. So it's very important, the ground rent, to definitely look at that. Leasehold at 250 years. And then we've got the estimated completion date of the beginning of 2023. Projected yields of circa 5%. I'll let Nicola talk a little bit later about the tenants and the yields and all that. So yeah, let's move on to the area. Perfect. So, I mean, we've talked plenty about Digbeth, I think. So just in that area map there with the little gold icon, bottom right hand of the screen, as you can see around you, you've got sort of all the amenities you need on day to day. I mean, that's obviously what's happening now, right? You've got your convenience store there, you've got your gym store there. No doubt in 2 years' time, that's going to be very, very different. You're going to have a lot more right on your doorstep once investment and development continue over the next 2 years. So yeah, everything, even at the moment, what you need on your doorstep. You're 20 minutes into Birmingham New Street Station, 20-minute walk. As I said, just straight up Bradford Street. And then just to the left of Birmingham New Street Station is, I'd say, an up-and-coming sort of new business hub of Birmingham. So that's where the HSBC, HMRC, PwC, and then also the Mailbox Shopping Centre, all sort of that west of the train station. So again, a lot of investment and a lot of business and all that going in there within 20-minute walk from our development. So very easy, accessible. Jump on a bike for 5 minutes. Or a bus. It's all very easy, accessible. And then if we look just up north, so we've got a few, I think it's purple dots up there, with Snow Hill Station. Again, very, very much a business hub there. So you've got like Snow Hill 1, Snow Hill 2, very big corporate office blocks there, a lot going on. It's, I think, KPMG up there, EY, the actual headquarters of HS2 up there. So again, very much a business district of Birmingham, going on there. And again, 20 to 25-minute walk. You can jump on a bus, cycle.
This would be a tram-linked station close to the building. Is it Metro tram-link?
Yes, so there's an extension, which I'll also get onto, from the Midlands Metro, which is going to be just a 2-minute stop away from Eastern Green. So yeah, that's actually going to link directly to Birmingham Curzon Station with HS2, and it's going to also extend sort of into the city centre, Jewellery Quarterway. I think the great thing to note about that, I mean, we were all saying, you know, how London you can easily commute for an hour. Once that tram line's up and running, and HS2, you can leave your apartment, and obviously if you time it perfectly well, leave your apartment, jump on the tram, you're into Curzon, jump on HS2, and you're in London in less than an hour. Amazing.
Yeah. Which is less than some people's commute from one side of London to the other. I mean, I can remember being in London. It took like an hour and 15 minutes to get into London. So that's quite incredible connectivity that we're going to see over the next number of years.
Exactly. And I mean, it's a tram and one train, right? So it's as Nicola said, I mean, how perfect if, you know, you have one person working in Birmingham and one person in London, and they're going in only half the time. So
I think on those points of interest, Stacey, that you just mentioned as well, they do relate to the tenant profile, in terms of I mean, I'll talk about it later, but the type of tenant we already have in our developments, you know, the children's hospitals noted on that map, we have a lot of student medics that rent our units, and a lot of young professionals. Everything that's highlighted on that map, it definitely exaggerates the type of tenant you're going to have living in your property. And I know personally, I'm a landlord, and it is nice to know you've maybe got a young professional couple in there, maybe someone working hard who's not in the flat so much, but they're gonna, you know, the young professional will be drawn to the, you know, the entertainment side of the city that Digbeth can provide, and then the short travel to work. So we're definitely going to see a similar type of tenant to what we already have in our other developments, which is good for investors, good for landlords.
Yeah, I mean, you don't necessarily always want to live where you work, right?
Yeah, correct.
So as long as it's easy accessible and it's easy to commute there, how great is that? You know, you can walk to work, but you don't live by your work. You live in a cool, trendy, up and coming neighborhood. So yeah, I mean, Birmingham isn't that big, right? So it's right on the doorstep of everything. And I think another, probably, I mentioned the tram, and then I know earlier you mentioned Smithfield Regeneration site, which is just south of Birmingham New Street Station. I mean, that's also going to be a massive regen. It's, I think, 500 million worth of investment, like 1.2 million square feet of mixed use space. So I mean, plenty of, obviously, thousands of jobs going in there too once that all completes, and that 5-minute walk away. So it really is. And as you, like, when you look at this investment and you look what's happening, you can see how the city is expanding, and when the investment's going on and how it is going south. And give it a couple of years, and Digbeth will be part of the city centre.
Yeah, absolutely.
Perfect. Yeah. So let's we'll move on to, I think, the next slide. So just looking at what's on the market, I mean, I know Grant probably gets this asked quite a lot, you know, that the market is very transparent. It's very easy to jump on the internet. It's very easy to look at this, you know, and have a bit of a click around. And yeah, so we've just sort of laid out what we see on the market at the moment, what is currently selling, what's sort of comparable to Eastern Green, you know, spec wise, development wise, 1 and 2 beds. So I think the one we probably get asked the most on is probably a scheme called Apex Lofts. So it's very close to Eastern Green. It's in the Digbeth area. It's a very similar spec, same ground rent. It's got a slightly higher exchange deposit, so you're looking at about 20% there as an exchange deposit. Service charge and everything very, very similar. So comparable wise, it is very similar to Eastern Green. But if you look at those prices there, you can see, you know, over the £400 per square foot mark already.
Yeah, it's quite a considerable saving on the Eastern Green that we've managed to negotiate as part of the underwrite model.
And I think part of obviously what IPG offer on an underwrite basis, you know, like you said earlier, having that skin in the game, it gives developers, it de-risks them a lot. Obviously, they know once it completes, they will have our units completely sold out, because if we don't sell them, we have an obligation to buy them. So it helps them get better rates on financing. It helps them to get financing. And yeah, I mean, with that, we can negotiate a better rate. So I think if we look at it, we've got an extremely competitive pricing here. On average, we're at £381 per square foot. So just to put that in perspective, you can see what else is going on in the market. So another comparable we get asked about probably is the Axiom. So just west, see, they're just west of the city centre. Again, very comparable to Eastern Green on spec, on service charge. It's, and I think, again, if you look at those prices, you're hitting the £400+ per square foot again. I mean, even slightly more in the city centre, but you know, what the 1 beds you're paying nearly £30 per square foot more. just to be maybe a 10-minute shorter walk into the city centre. A few things to note with that is the ground rent. It's not at 0.1%, and as I said, it's a very important thing to note nowadays. You know, something can look very good on paper. You look at the prices, it looks good, but you need to really read the fine print. Ground rent there on 0.1%. It's about 250 to 350, so you might be okay with a 1 bed, but when you hit that 2 bed, you know, with 250, you're automatically over that 0.1%. So.
And then you've got the financing issues, right? For trying to get lending will be very, very difficult.
Exactly.
Or no, impossible.
Yeah. So I mean, they're getting more and more strict now. So it's either near impossible, or you're going to be very limited with the lenders that you're given and the rates you're given also. So and I mean, then just looking at a few others in the area. I mean, Westminster Works. It sold, I think, in 2017. So, I mean, if you look at that price range there, you're hitting on average, sort of the £350 per square, £380 per square foot. And that was 3 years ago. So if you compare it, it just positions us very, very well in value. And you know, all those other places, a lot of the other schemes are already hitting that £400 per square foot mark. So, you know, it's going to get there, and that's why you can see the developers going to sit on his units and wait, because if Apex Lofts are selling and Kent Street Residence is selling and the Axiom is selling at 400 plus, why wouldn't he be able to sell at that in 3 years' time? So it just makes sense, right? So I think very, very well positioned, very, very good value for money. There's other schemes. I know a lot of people have heard Seven Capital. They're a very prominent name in Birmingham, and they've done a lot of things there. And they had a very successful scheme called St. Martin's Place, I think it was, just west of the city, which they sold in 2018 and sold extremely well, all sold out. And that went for, I think, between £440 per square foot. And that was 2 years ago. So it just shows, you know, the market is there. There's the buyer interest, and there's the appetite that is there. So that's already sold out. There's going to be growth here, no doubt about it. And you know, you're probably going to see that growth already in the construction period of this development. And
I think it's clear that we'll see some of the catch up from what we've seen in Manchester over the years when we started investing there in 2015, and we've seen that price growth in Manchester quite significantly, and there's no question that's going to be replicated in Birmingham as a bigger city and closer to London.
No, for sure. I mean, Manchester sort of jumped on the investment and the both foreign and, you know, domestic investment a lot quicker than Birmingham did, and you could see that in the regeneration, all that went on. And the Northern Powerhouse and Birmingham were a bit late to the party, but to our benefit.
Correct. So, yes, absolutely.
I mean, why you kind of think, you know, why was Manchester hitting these prices and not Birmingham? Birmingham's the second city. It's you know, closest to London. It should be where Manchester is.
And that's what's exciting about it now, isn't it? As I say, you've been there, I've been there, and you just look around the city and you see what's to come. And therefore, you know, what's to come is where all your growth is coming from, with all that high level investment going in across each and every quarter of the city. So it's very, very exciting.
I mean, you see the companies going in there too, right? I mean, the HSBC, the Barclays,
the Deutsche Banks and so on.
I mean, they also, you know, not only can people get more sort of bang for their buck in their apartments, but companies are also thinking the same thing.
I mean, it's well under half the price of London, 45 minutes away, and people on good salaries have relocated from London. So as we know, affordability drives pricing, and therefore, you know, I think we're going to see a lot of that over the next few years.
I was going to say, there's big companies like Complete in Birmingham now as well, so but no, seriously, in the last 2 years, I know we've been there since 2018, and in my visits to see my team there, the change has been huge in terms of definitely social, bars, restaurants, but the tenant the platform that we use to reference tenants, the change in, we get statistics that are pulled through monthly that show kind of average wage or, you know, the type of industry they work in. We've seen a big change from the kind of, you know, retail staff worker to the like mid-professional or office. There's been a big change, and I think it's only going to increase.
Interesting. Yeah, very interesting.
Yeah.
Oh, perfect. I was like, Nicola jumped in before your slide even came. Yeah, I'll pass to you now, Nicola, just to chat obviously a bit more about Complete, and yeah, maybe the yields that can be expected at Eastern Green as well as the tenant profile.
Yeah, I mean, I'll cover details and statistics about where we are now, which I think will paint a decent start point picture for people on the call to see. There'll be, and as we've spoken about everything that's happening in Birmingham, this is only going to be an increased projection by 2023. So if we just move on to the next slide, I'll explain who Complete are. Some of you may not know, but some may already use our services. We specialise in residential asset management for overseas landlords and for investors. We operate in 13 global markets, and we currently have offices in London, Hong Kong, Berlin, Manchester, and importantly for today, Birmingham. Our Birmingham office is based in the Jewellery Quarter, which people that know a bit about Birmingham already will know of this area. Kind of the high-end, nice office conversions, not office, sorry, kind of old mill conversions, nice big open spaces, was previously the trendy part, but you know, now that's Digbeth, so things are changing. I'd say I walk quite fast, but it's probably about a 30-minute walk from the Jewellery Quarter out to Digbeth, much quicker in the car, so we'll be able to take care of all these properties very well. We have at the moment 100 units under residential management in Birmingham. In terms of our service offering, we cover end to end, so we will know about, you know, your property when you're purchasing it. We will snag it prior to your completion. Generally, that's because of our relationship with IP Global and our relationship with the developer. It means we can get on site early. We can get furnishing projections. We can put packs together. We can, window dressing is quite an important one that people forget about. It's quite awkward, but we can get blinds and curtains in there. We can start marketing the development early and, you know, then lead on to tenanting the property. Once the tenant's in, we'll fully manage every aspect of that. So the developments we have under management at the moment, they're predominantly spread across the units are predominantly spread across 2 developments in a scheme that was called the Curve. So if we go on to the next slide, I'll just run through some of the statistics on these. So our current average gross rental yield is 4.76%, so just under the 5. We had 107% rent versus cash flow. So to explain this, this is the rent that we achieved immediately after completion, so the first rent when the property was let, versus the projected rent that IP Global will have provided when a client purchased this unit, you know, 2-3 years earlier. So, you know, we matched and in some cases increased on the information you provided the client, which is always comforting, I guess, to hear as somebody who's about to think about investing now. 65% of our tenants renewed their tenancy with us, which is higher than the current UK average. And on those renewals, we achieved a 3% average rent increase. So again, kind of showing that the rents are still moving upwards, and I can't see that that's going to change anytime soon. Our current occupancy rate in Birmingham's 100%. That rarely drops below 96, well, below 98, I'd say. We have a very high occupancy rate in Birmingham. I think that goes back to your point on the supply and demand. Whenever we have a property that comes up, we get very quick interest on it, viewings booked early, so we can achieve a very kind of small void period on these units, which is what any investor wants to hear. We can split these statistics down into the separate developments, which is on the next slide. So curve 1, curve 2. Yeah, very interesting naming there. But the initial completion on curve 1 was June 2018. So again, going back to the rent and cash flow, that was still matched or above. Gross rental yields 5%, tenancy renewals in this block slightly higher, and the rent increase higher. Curve 2, completion was November 18, rent versus cash flow higher. I'd say that's because in this block we had a slightly reduced number of units, and gross rent yields still 4.7%, tenancy renewals and average rent increase still high, slightly lower than curve 1. I think this information kind of highlights, you know, maybe the cyclical market in the UK. That the demand is a lot higher in summer. We can push rents, and people try and retain where, you know, it's harder to move because everyone else is trying to. Whereas kind of the winter period, November, December, the market is a bit more open. People generally will move, you know, try and keep their rent the same. Landlords will accept lower rents because the market's a bit quieter at that time, but still, you know, all good figures there. I think really kind of substantiating everything you've gone over about Birmingham, and what's currently being achieved. I think, I mean, I don't know if there's anything else you want to know about Birmingham currently. I think we've covered a lot of information. I think I can see there's a few people with questions that are popping up at the bottom of my screen, so we'll let them come through and see if we can help.
Yes, let's have a look at the questions then, Nicola. Let's see what's coming through. Okay, there's one question there in terms of, are there any restrictions for foreign buyers in the UK, Stacey? Perhaps you want to answer that question.
I mean, I assume that's on the mortgaging side. I
think just purely in terms of any restrictions on if you can purchase in the UK, purchase property in the UK.
No, I think probably the biggest restrictions might come into it with lending, right? I mean, as I said,
with the
earlier,
ground rent,
the lending, but also just generally the lending in different foreign countries is becoming a bit tighter for the UK in different regional cities in the UK. So my suggestion obviously we do obviously have another sister company of ours called Liquid Expat who manage our clients' mortgages, and they'd probably be the best people to give advice for, because it all depends on, first of all, your personal circumstances, and then also where you reside. I know obviously coming from South Africa, it's getting a lot more difficult to lend there if you're living in South Africa, just for what's going on. So sorry, to put that into short, my best suggestion would be, where you're based, reach out to a mortgage provider or mortgage broker. As I said, our sister company is Liquid Expat, to find out if there's restrictions on where you live in your area, and then it obviously also depends personally, right?
So no, you make some good points there. So from a mortgage perspective, we can make the introduction at Liquid Expat Mortgages to provide the advice on the mortgaging side. And then from a buying perspective, of course, there's no restrictions for buying in the UK, whatever the nationality, in effect, you can buy. So it's quite straightforward from that perspective. So for that inquiry, yes, we can certainly assist there. Another question here coming in: when is the train station going to be operational? and what's the walking distance from the project to the tram station? So I assume they're talking about when's HS2 going to be operational in Birmingham, and the Metrolink station Curzon leading into the HS2 station.
Yeah, so I mean that's going to be in line with the HS2 completion. They've already started certain extensions on the Midlands Metro, so that's construction on the tram line has started, but the actual tram station to HS2 will obviously only be functional once HS2 Curzon station opens. Right? You can't get a tram to something that isn't existent at the moment. So that will be completed in line with when the Curzon and HS2 station is up and running. And from our development, it's literally a 2-minute walk. So from sort of the back of the development, you can see it. I've stood there before. You can see it, and it's a 2-minute walk. Right. It's very, very quick.
Okay, so very convenient there. Okay.
Yeah.
There's a question there about the ironworks. Obviously, you'll be aware of those other projects there, Stacey. So do you want to comment on that particular question?
Yeah. So I've actually been into the ironworks development before. It's something that sold a while ago. It is the development right next to ours, so it's fully completed, which is obviously great. Also, it's completed next to ours. It sold, I think, in 2018, so again about 2.5 years ago. They're following a similar, I'd say PSF, 2 hours in 2018, maybe slightly lower. But the thing there is the apartments were a lot bigger.
Yeah.
So yeah, it's a beautiful development. I've been in really nice spec. But yeah, I mean, it sold a while ago, so we're probably a similar price point now.
Okay.
Yeah. Oh, sorry, I didn't actually. What is the question? What is ironworks?
So basically, those investors have just already benefited from the Birmingham growth.
I see the question now. Sorry. Yes. So the PSF is less, and the prices are higher because of the bigger apartments, right?
Oh, I understood.
General sort of rule is the bigger the apartments, the lower the PSF. So that's sort of that question. There are bigger apartments in at Eastern Green, and a lot of other developments going on.
Yeah. Okay. Nicola, there's one here for you actually. Are we obliged to go with complete? So maybe sort of leading into that, I suppose it's just a chance to sort of share the USPs for Complete Limited, and I suppose why so many clients use Complete.
Yeah, sure. I mean, no, you're not obliged to use Complete. It's not something we could force up anybody, nor would we want to. People can come and use us purely based on our services. We have great feedback from our clients. We have a number of clients that use us across different developments in different cities. I think in terms of what we offer or our USP, it's definitely that we specialise in this new build developments coming to a market, managing multiple units within the same block. This is something we already do. I mean, specifically, I'm head of regional cities, so we've been doing this now in Manchester, Leeds, Liverpool, Birmingham since 2015, and we've managed to kind of really streamline our processes. So we know, we get on board with the developers. We have the relationship with IP Global, which means that we can get into these sites prior to completion. We can learn about the development. We can get hold of who the block manager is going to be prior to completion. We get a point of contact, which benefits everybody. Again, with the furnishing, I think just understanding our clients. I've worked in this industry for, over 20 years now, and I've worked with different types of investors. So you have your accidental investor, somebody who's ended up with a property that they have to rent out, and that's a very different client to an investor who's an overseas investor or is specifically looking at a unit as an asset. We can help, pull as great a yield as you need out of that asset by furnishing it in a certain way, marketing the property to the right type of tenant. We deal with multiple agents. So when you instruct complete, when it comes to the tenanting side of things, we work with multi-local agents. So it means that rather than just complete advertising your property, you know, in Manchester, for instance, 6 estate agents will be advertising that unit, and then they feed the interest, they feed the applicants through to us, and then we will just be your single point of contact and deal back with the investor. So it really opens up the market, which I think it's something that other agents, you know, definitely don't do. I don't know why, because I think it's great to work together. But basically, on the high street, generally, you would keep your own kind of landlords and keep to yourself. But we make sure that, you know, all of our clients are getting as much exposure in the market as possible. So yeah, you know, I think we're great, obviously.
I think probably just to add to that, Nicola, is obviously we work sort of side by side from when we look at the projects, right until completion, and they sort of take over. I mean, when we look at a project and we decide we like it, you know, we're looking at price or whatever, we go to complete and we say, you know, this is a specification, what do you think? They give their commentary back. They're like, no, this is not good enough, or this is the type of rental market or rental tenants we're looking at. It needs to be this sort of spec, you know. So I think, like you said, we obviously work very closely together. You're involved from the beginning. You know the project extremely well. And yeah, I mean, you can get on.
It works. It's worked so far, and it works well. I think having clients that purchase in multiple cities and choose to use complete, and then also bring on all of their other properties and the rest of the portfolio with us. I mean, that speaks for itself, really, in terms of why you would choose to use us to manage your unit.
Yeah, no, I agree, and I think the lettings and management is such a critical part of the business model. I mean, obviously, step one is, you know, the easy part is buying the unit, and then it's really the whole buying process that's key, from lawyers to mortgaging, and of course, you know, the client getting comfort in the lettings of management and having the confidence to deal with a partner on the ground, such as yourself, Nicola, who's, as you quite rightly say, has got the office there in Manchester, in Birmingham, you know, to give the client peace of mind that everything will be looked after. Yeah, I think you know, the proposition is very, very strong indeed. Okay, I'm just conscious we're coming up to 9 o'clock in Hong Kong here, so perhaps we've just got a chance for 1 or 2 sort of final quick questions. Sure. What have we got? So HS2 will take place in around 10 years, question mark. So actually it's before that, isn't it? It'll be opening up in Birmingham.
2026.
2026 for Birmingham. So that's very soon. Okay, how many units do we have left? Well, I think the key thing we can say is the project has started extremely well. I'm not sure exactly in terms of where we are right now, but I know that you know, the sentiment is very strong for this project across the regions, across our offices, and there's lots of conversations going on. I think what's interesting to add is actually since the US election, and even actually since the announcement on Monday last week with the vaccine and the confidence that brought into the stock markets, we've definitely seen that provide further confidence on top of everything else in the investment case, etc., for clients to move forward with the investment. So I mean, the short answer to your question, sir, is that it's been exceptionally well received, and the project is going very, very well. Sorry.
No,
I got
that's okay.
carried away with my enthusiasm.
No, that's okay. I was just going to add a few, well, not a few, just a point, but I think, I mean, so much has been going on the last couple of years, right? You know, Brexit, then the virus and the election, all that. And I think, you know, as soon as people start seeing some normality, if you can even say that, because I don't know if that's what it is, but they're done with sitting on their hands. You know, they want to invest, they want to do something. So I think it will be only a matter of time until we see a lot more confidence returning to the market. And yeah, like as you said, I think it's hopefully, fingers crossed, going to make the turnaround very soon. Yeah,
absolutely. And I think people have got confidence in hard assets. They feel comfortable in the security of property. There's no question about that, and obviously the currency opportunity too. Just one final question here. I'm interested, what is the purchase process and how long will it take? I mean, basically the project completes Jan 23. So in effect, it's 15% down now, and you've locked in the pricing. And as I say, we firmly expect growth over the next couple of years, given all the regeneration we've talked about. I think one thing I would add is it's very much about the investment journey with IP Global. I mean, step one is securing the property, but that is really first base. You know, second base is the way we help the client through the buying process with introduction to the lawyers. Then obviously we can give comfort around the mortgaging process, and obviously ensuring we can get the mortgages we've talked about, and satisfying the ground issues.
I think, sorry, I keep interrupting you, but I think I was going to say, going back to the beginning where you said, you know, like IP Global is very different from other companies where we invest alongside our clients. You know, we're not going to get into a project where clients can't get mortgages, or, you know, there's issues, or we don't believe it's going to get built, because if we can't sell it, we as a company have to buy it, right? So we only invest in projects we believe are really great and obviously really good value as well. So I mean, like you say, we do all this DD and all this due diligence at the outset for ourselves, but then it also is for our clients, right? Because we essentially are also a client.
Yeah, absolutely. So, I mean, we're pulling our capital in, and we're viewing it exactly like a client would. As I say, which is very unique in terms of property investing, because, you know, most companies are purely marketing without taking risk. We're taking risk. You know, you're doing all the research and due diligence to make sure we can bring the very best opportunities to clients. So I mean,
we do all that DD, and, you know, we do we check, as I say, we work alongside Complete. We make sure the rentals are there, the yields are there, you know, what if the specification is right, and then also along with Liquid Experts, our sister company, to make sure we can get mortgages on a product, you know, how the process is going to work, who can get them, what are the options, and with that comes a lot of, you know, checking the ground rent and checking who, you know, the building warranty is with, and to make sure that all of those are acceptable and they're not going to provide any issues for our clients down the line.
I think on that, Stacey, I would say when you kind of come to me with regards to certain projects and ask about rent projections, I'm very realistic about those. I'm, you know, because I'm aware that ultimately, you know, in 2023, some of these investors are going to come to my team and they're going to ask my team to rent their property for that amount of money. So, you know, I'm not kind of a general sweeping glance at the market and look at, you know, what's next to it. I'm very realistic, sometimes probably to your annoyance, but I think, I think it's fair to say.
I think it's probably good to note. I mean, if you look at what some people are projecting or forecasting in the market, I think I actually sent you something recently, Nicola, saying, can you believe this is what they're saying? It's like one bed's for, you know, 1,100 plus or something ridiculous, you know, and yes, then they can flash 6-7% yields on websites and that, but it's very unrealistic, and it's frustrating for us, right? Because it seems like ours are low, but actually ours are what the market, where the market is. And I think you're right. I mean, we sometimes say, no, we want this, and you're like, nope, these are the rents. This is what you're getting. I
think, you know, sometimes I might be, you know, maybe slightly cautious, but I think it's
that's a good thing, right?
And what I would want to know as an investor definitely is that, you know, what you're advising me as a rental price is what I'm going to be able to achieve, which is what I do, because that's what we're going to be asked to do. So yeah, I think that's quite an important point to get across today.
Great. Okay, so I think perhaps we'll call it a day there, as it's just after 9 o'clock in Hong Kong. I'm sure, Nicola, you're ready for your lunch in the UK there. It's just after 1:05 in the afternoon. So Nicola, thanks very much for joining. That's been great, really insightful, and great to have your thoughts from the ground. So thanks for giving up the time today and sharing that insight and thoughts with all of the people on the line. I think that's been very, very, very helpful indeed. So thank you. Thank you very much. Stacey, thanks again for your great input, and obviously the great overview of the project, and particularly all the work you've done over the last number of months to bring this opportunity.
Thanks, Grant.
And certainly everyone who's tuned in, thank you for joining. If you've got any further questions for myself, for Nicola, for Stacey, do drop a line. As I say, we're really into the throes of this project now, which is, as I say, is progressing very well. If you require further information, do reach out and we'll be happy to help you. But all it remains to say is, thank you very much indeed for joining. Have a good day, evening ahead, and we look forward to you tuning in again. So thank you very much indeed. Thank you.
Bye.
Thanks.